All right, guys, I want to jump into this increasing supply all over the nation. Lots of articles, lots of videos, even crash videos coming back as we're seeing lots of increasing supply, which is going to affect the real estate market. And we want to look at these numbers. And I had someone say over the years, and actually recently, that I can be negative or positive. And here's the reality of data. Data is not positive. Data is not negative. Data is just data. Now, how you choose to interpret that can be positive or negative. And what's a way to view the data, not just as a strategy, but to know kind of what's likely to happen. Hey, everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And I would say over the last 3 or 4 years, I've had many conversations about what would really impact the market and could we have a major market correction. And we have had a major market correction in my lifetime, in my mortgage career, obviously called the Great Recession during 2008. So it definitely can happen. Anytime I've heard somebody say, Rayce, the market is in for a big correction, if you go on YouTube and see lots of videos that are popping up about that as we get more supply, I always say, walk me through how that's going to happen, because I'm totally open to the idea that it could happen if we got enough supply. And I always get emotional response, like prices are too high, it doesn't really make sense, it's not close to the median income, no one can afford the housing payments. And though those are emotional arguments, and I definitely get that, it doesn't change the data. And the data is simple. In 2008, we had almost 30 plus months of inventory. Right now we have 4. And so we would have to get to enough months to actually really get a market correction, which is why across the nation, even when rates got super high, there were really no major price corrections in most of your major markets. And even some markets that saw a little bit, other markets went up just to make up for that. So nationally, we've had increasing prices, and now rates have fallen. They came up a little bit recently, but in general, the trend has been down. But with that being said, we have had supply come up, and in Florida, we've had a fair amount of supply come up. So let's jump into this article from Redfin where they're covering this increase in supply, especially here in Florida. So the headline reads, home prices stagnate in Florida and Texas as supply soars. And the first point I'm going to make is this. They're talking a lot about Cape Coral and Northport up 50% from a year earlier in March. That's important because obviously where you live at matters, even in the state. If you live in Central Florida, that's a lot different living in Port Charlotte, a lot different living on the East Coast, say towards the beaches, or down in Miami. All those markets are different. So it's interesting to look at a state trend, but as far as every individual area, you want to make sure you understand your market is local. But again, all over the U.S. supply is increasing. So here's how this trend shows up in U.S. housing market data for March, which covers 85 major metropolitan areas. And they cover things like Northport, Florida, again up 48%, Fort Lauderdale up 30%, Tampa up 29%, Orlando up 23%. And you will notice West Palm Beach, a lot of these are Florida markets. And I would say that's because of this statement here. Out-of-town home buyers no longer see Florida as a place to get an amazing value. Now they're moving to North Carolina or Tennessee to get a great deal. That is the most important statement to understand. As prices go up, it pushes people out, but it doesn't necessarily cause a major market correction. Unless you want to live in Tennessee or Nebraska or wherever, and you want to live in Florida, which is where people want to live, you're going to pay more to live here. And if you want to live in California, if you want to live in Manhattan, those things would be the same. As some markets are undervalued, which I believe Florida was for a long time, but after COVID, everybody moved here for whatever reason, and now Florida is one of the more desirable places to live. Now, one of the things that's going on here is nationwide new listings slowed in March on prices from a year earlier. But this is the big thing to understand, that new listings have slowed because mortgage rates are staying higher for longer, which they are, which is exacerbating the lock-in effect. The lock-in effect is what's really kind of keeping the market in check. That means that during COVID or after COVID, people got really, really, really low rates. So more people have their homes paid off than ever before, and you have people with really, really low rates. So as interest rates go up, which they have went up again recently, what happens is all these people that have low payments do not sell their house, which means that's the lock-in effect. All of that supply doesn't get put back on the market like it normally would in a normal market. So even though rates go up and less people buy because houses are more expensive, the supply doesn't come on like it should because sellers are saying, why am I going to sell my house? Even though I can get great money for my house, I've got this low payment, I'm not going to get rid of that. That is the lock-in effect. And the good news is, as rates come down, it entices those sellers to put the house back on the market, which is why I think eventually we'll be headed towards a more balanced market. Now we have 4 months now. People say 6 months is a balanced market. I think the trend is more important than how many months are on the market, and the trend right now is to go up. And even when you look here across the nation, you can see across the nation, supply is increasing, anywhere from 24%. Now there are some anomalies here that supply has went down, but in Florida, supply has increased almost 57%. Again, that's simply because the lock-in effect, people aren't putting their houses on the market, but demand is slowing, that is causing houses to go up in the market. So what does that mean? What would I do if I was a seller, real estate agent, mortgage person, any of those? Is to understand timing the market never works. So many people in the last 5 years are kicking themselves because they tried to time the market. We are going to have most likely more appreciation, 3 to 5% over the next 3 to 5 years every year. And at the same time, we are going to have rates that are going to be falling at some point, probably near the end of this year. This is a cool chart showing predictions all the way out to 2028, which I don't really want to look that far in the future. But you can see in December, they're ranging 6.67 to 7.09. And you can see by the end of December next year, 5.18 to 5.5. That is super important to understand because people tend to make really short-term decisions regardless of what the data says. When their stock goes down, they sell, and then 3 months later, it's up. A lot of times you have to play the long game, and the housing market only makes sense if you're playing the long game. What is going to happen? Rates are going to go down. Don't get your financial advice from me, but there is nobody predicting rates to go up drastically at this point, only down, just as I showed you. What's going to happen when rates go down? You're going to get that supply to get out the market really quick. As soon as housing payments fall, not prices, but payments, it's going to push more people into the market. You're going to get probably more appreciation than expected. And you don't want to be one of these people that's watching this video right now and says, you know what, man, I should have actually bought a house when the market was in my favor. And if you're a real estate agent right now, what you should be doing is creating a daily success plan so that you're doing the activities you need to do every day to work with more buyers and sellers. If you have any questions on that, the market, anything else, reach out to me. As more information becomes available that moves the market, as always, I'll cover it right here. Have a great day, great week, and I'll talk to you soon.